Something interesting that I have been noticing across websites like Zillow and Realtor.com is the reduction of prices. As a prospective home buyer, I've been noticing more and more of these listings that says price reduced or price cut, and it got me thinking, are we now officially in a housing market crash? I know you all will find a lot of value from this video, so please be sure to subscribe to see some more awesome content about the economy and just personal finance in general. Over the past few months, we've been hearing that home prices are going to fall. And guess what? I think we're here. The recession, and yes, I am calling it a recession, a mild one, is finally showing its effects on the real estate market. Is now the right time to buy? Is it the right time to invest in real estate? Such questions might be coming up in your mind. And in today's video, I'm going to explore all of these questions with you all and also talk about if we're officially in a real estate market recession. We're going to look at different stats about home prices, housing activities, and what buyers are thinking about real estate at the moment. So to start off with, are we in a housing market crash? Well, let's look at some stats. Excluding the market freeze that happened at the start of the pandemic, existing home sales in July fell to a seasonal adjusted annual pace of 4.81 million. This is the lowest it has been since November of 2015. That means the sales of new homes reached their lowest levels in 6 years. So this home market that was scorching hot during the summer has finally cooled down. And so are we experiencing this cool down during the winter months of 2022? Let's continue on with some more stats. According to the Mortgage Broker Association, new mortgage loan applications fell 23% in the start of September compared to over a year ago. Also, mortgage loan refinances are down 83% compared to a year ago. That, of course, is impacted by the Fed raising interest rates in order to cool down the economy and lower home prices. You have to honestly think about, why would anyone want to refinance their house to today's mortgage rate when their original loan rate is probably much lower? I was actually talking to a mortgage broker around my area, and they were explaining to me that a lot of local lenders and mortgage brokers are getting out of the business. They're actually going bankrupt because they thought that the demand at the start of the year will continue on till the end of this year. And so you have a lot of these mortgage companies and lenders to keep up with demand. They're hiring employees, they're setting up their business with new technology, with expensive applications. And then when the market started to slow down, they don't have as much income coming in to help pay for all their new expenses, because they thought the demand would continue on for the rest of the year. And so a lot of them are forced to file for bankruptcy and to leave their business until the demand comes back up again. The housing market continues to decline, causing a lot of home builders to lower their prices. The National Home Builder Association has this index that traces the sentiments of home builders. And currently, the Home Builders Association sentiment is down to 46 out of 100. And anything lower than 50 is considered bad. This is the lowest it has been since 2016, excluding the start of the pandemic, of course. At the start of this year, home builder sentiment was around 83. So 83 out of 100 of their poll thought that the economy will continue on, that home buying and home building demand will stay up. It was at 83 at the start of this year. Now it's at 46, almost half of what it was earlier this year. And this makes sense. A lot of people are not buying new construction houses because, number one, interest rates are high, and plus new construction homes are still pretty expensive. The chairman of the National Home Builders Association, Jerry Conter, states that buyers' traffic has significantly decreased and that about a quarter of all home builders decrease their prices. So talking about this index, this sentiment index that traces exactly how home builders are feeling about the economy, this index traces three main factors: buyer traffic, sales condition, and sales forecast. And all of these three factors, the buyer's traffic, the sales forecast, the sales condition, they all fell significantly over the past few months. So a lot of home builders are just not as motivated to build a house because they don't know if they're going to sell it. In addition to knowing that a lot of homeowners won't be buying their houses because interest rates are high, home builders are still dealing with higher construction costs because there are still supply issues going on. And so even though a lot of builders would want to decrease their price, they can't do it because of the cost of materials, the cost of labor. They just can't justify taking a loss currently on some of their properties. I was also reading that the real estate market has a ripple effect on other sectors of the economy. For example, we've been talking about home builders. And so home builders have to buy a lot of materials from other sectors of the economy. So for example, appliance companies like Whirlpool or Samsung, they're used to getting or selling this amount of units of fridges or stoves to this home builder. But currently, they've probably been seeing a decrease in the amount of units they're selling to home builders because home builders are decreasing the amount of houses they're building. And so you see that through real estate, it has a big impact on other sectors of the economy because so many other factors are tied into real estate, right? If I buy a house, I'm going to buy furniture for that house. I'm going to buy decorations for Christmas. I'm going to buy a TV and I'm going to watch things on the TV. And so many things plays an important role into the market, and we're all connected. Every sector is connected or dependent upon one sector or the other. And so that's why having a housing market crash can be detrimental to the economy as a whole. Back in May, renowned economist Mark Zandi announced on a Fortune article that the housing boom that we've been experiencing since the pandemic is soon to come to a market correction. He stated back in May, when the interest rates were hovering around 3%, that we are about to experience a slump during these winter months. Additionally, Zandi said that these will have ripple effects, like I was just talking about, on other sectors of the economy. Now it is September, and it seems like Zandi was pretty spot on with his predictions. We see these reduced home prices, we see buyers not making as many offers on properties, and we see even sellers actually waiting out the next few years to put their property back on the market. You have certain regions like Austin, Texas, Boise, Idaho that blossomed during the pandemic, having significantly discounted properties on the MLS in those regions. This Fortune article also stated that if we had double-digit percentage decreases, let's say like 15% home price decrease, this would be the second biggest price decrease post-World War II since the market crash that happened back in 07 and 08, where the price decrease was around 27%. So we essentially went from a housing boom to a housing bubble. Now, what are real estate agents saying? A lot of real estate agents are saying that their sellers are actually just sitting on the sideline at the moment. They're taking their homes off the market. I was in the market, and I'm still in the market to buy a house, and I saved different properties, and I've noticed that a lot of them just went off the market. And I contacted the realtor and said, hey, this was on the market, what happened? And they tell me, oh yeah, the seller is just waiting it out, just seeing how the economy goes, and they'll probably put it back on the market maybe in 2 or 3 years after everything clears up. And so I think that's interesting because they're trying to time the market, and no one can do that. If you want to sell your house, if you need to sell your house, you just have to do it. On top of talking about sellers, home buyers are seeing everything that's happening. They're seeing the higher interest rates. They're seeing a lot of sellers taking their properties off of the market, and there's a lot of uncertainty in their mind. Even though there are some of these uncertainties about a recession coming upon us, or the recession that is already upon us, there are still a ton of buyers looking for properties. Despite the still expensive real estate market and expensive rents that are going on, buyers still exist. There was a slight increase in the amount of homes sold in August compared to July of this year, but with the recent hike in interest rates, home prices are still declining for the month of September, and most likely will continue on till the end of this year. So a lot of buyers are seeing this as a silver lining, right? They don't have to wait outside someone's someone's house during the open house visit in order to see their house. They don't have to go on a bidding war on someone's back porch for their property, right? They're able to make a reasonable offer, even lower than asking. They're able not to waive the contingencies of like waiving inspections or waiving an appraisal. They can make a fair assessment, take their time in actually buying a house and not just jump on the opportunity because of interest rates being higher and there are less people in the pool to buy a specific house. So this can be a great opportunity for retail buyers and investors to make offers lower than asking and kind of go back to what we used to do, how we used to buy and sell homes. So I guess in a way, what Jerome Powell at the Fed is doing is actually working, right? Home prices are decreasing. People are able to make fair offers and we're going back to some sort of normalcy in the market. So when you look at this recession and the declines in home prices, what does it actually mean as a bigger picture, as a macro level point of view? And I think that when you look at pre-pandemic levels, we're still not at the number where we need to be. You know, home prices are still super expensive. And yes, there can be like a 10-15% decrease in prices and home values, but that still brings us well above the normal range of appreciation for home values. And so where are home prices really going? Are they going to a point where it's actually affordable for the average citizen, or is it just going back to just another high price home? Because I was looking at several houses and the prices that they were listing it at, I was like, what in the world? How are you trying to sell this house for this amount of money? And they decrease it by like, let's say $200,000, but it's still a super expensive house. And this recently happened with me, and the realtor was all like, yeah, they decreased it $200,000. I'm all like, this is still not a good deal because of this and that. And so where are we going as a nation? I mean, are we actually changing the forecast? Is what the Fed's doing actually helping the average day citizen, or is it kind of helping people who have money to invest in a home, to put a down payment on a home? I hope you all enjoyed this video of this breakdown of the housing market crash that's going to continue to happen. Let me know down below your predictions. What do I see happening? I see prices continuing to decline for this year, and it's been forecasted for next year to have even more of a decline and just to continue on throughout the whole year, which would be great because I'm still in the market to buy a house for myself where I can live in one unit, rent out the other units, just do a house hack or something like that. Let me know down below your sentiments and be sure to subscribe to this channel.